Thank you for joining us. My name is Lynette. I'm with AT Pros Inc. We are a specialty trade contractor, accounting, tax, and CFO firm. Today, we are going to be going over what a balance sheet is. And we're going to give you a couple of scenarios of why you need one and what happens if you don't have one. So grab a pen, paper, grab a drink, and let's get started. Thank you. Okay, let's jump right in. So what is a balance sheet and why your trade needs one, even if it's small? So a balance sheet it goes hand in hand with the financial statements, the profit and loss and the ledger detail, trial balance, other forms like that too. So this is going to go over what it is and why it's important. And I'm going to give you a couple scenarios also of someone who has one and someone who doesn't, and the effects that has if they don't. So let's get started. So what is a balance sheet? A balance sheet is a snapshot of your business finances at a specific point in time. So normally we run them for like December 31st or January 31st or something like that. It's going to give accumulated numbers on a lot of those items, meaning it's going to be the existence of your business and it's going to keep running a tally. The cash in bank, things like that are going to be under the assets. So cash in bank, receivables, basically who owes you money. And that could go on for infinity if you have money that is owed to you, or that balance will change every single month. It's also going to list your equipment and your tools. This could be your vehicles, your vans, trucks, large equipment, and any larger tools, not the small little tools, but it's going to be those bigger tools that you need, backhoes or anything like that you might need in your business. And of course, your vehicles, like I mentioned, your vans, vehicles, trailers, things like that are going to be included in your assets. That's basically what brings your business value. The other item is going to be liabilities. Now, this is going to be what you owe. It's going to be your bank loans, credit cards, lines of credit, unpaid bills, some things that aren't on there. It could be payroll taxes. It could be if you're financing insurance or anything like that, those things might be in there also. And then the last one is equity. This is what's left over. This is the owner's stake in the business. Basically, it could be multiple owners or one owner. It's going to be how much each person is worth or what is at stake in the business. This can also include, if you were a corporation, the amount of the original contributions to buy stock in the company, or it could be loans, or it's, anything that was contributed to the corporation on behalf of the owners. This is also going to be the retained earnings. The retained earnings is the net profit, basically from that profit and loss statement. It's going to show on there, and that number is going to continue to grow and grow and grow. And that truly, in a nutshell, shows the net worth of the company. So the secret is assets equal liabilities plus owner's equity. Basically, if you take all your cash and all your assets, you subtract all your liabilities, that should match up to what the owner's equity is at the end, basically what's left over. So why it matters for your trade or business. So a lot of people may not have these forms, but this is going to kind of explain to you why it's important that you do. So it actually tells you if you're profitable or not. And what I mean by that is basically if you have a lot of liabilities, but you have a lot of profit, then that's showing me that you have a lot of cash, but it may have been taken out as distributions, and now you're supplementing those expenses by the second box, lines of credit. So I have seen situations where a new client comes to me and they're like, I'm always broke and I don't know why. And it's because they have a lot of loans and outstanding balances, but the owner has been taking out more than the profit. So he's never been able to pay down those debts because there hasn't been enough assets or cash. So this also will allow you to track what you own versus what you owe. If you have $400,000 of equipment and $400,000 of loans, that equals net zero. So what we would try and do is get it to where your assets are more than the liabilities. We want money in the bank. We want equipment that has value, and we want to have low debt because that's going to increase the amount of your equity. So this will allow you, when we look at the profit and loss statement and the balance sheet altogether, it allows us to make smarter business businesses for our business. So it helps me to explain to you how it benefits your business to have this stuff organized and makes sense. So this will allow you to take that information, take it to the bank. You could buy equipment, you can hire staff. The balance sheet tells you if you can, because it's going to show how much you have in the bank and assets and how much debt you have. If you have too much debt and not enough assets, it's going to be very hard to justify that loan. This is also something that is a compliance issue, which most of my clients don't care about compliance, but they do care if I'm worried about their compliance, which I am. So it is required for S corporations and some businesses if they make over $250,000 gross per year. It is a requirement. A tax return cannot be completed without it. Also, if you are in the age or you plan on at some point selling or growing your business, it's very hard to do that because the buyers or investors, they demand clean financials. How are they supposed to make decisions about if it's a good investment if they can't even see what the numbers are? This really is a non-negotiable area. If you want your bank to give you financing, or you want to have an investor, or even if you want to sell your business, you will have to have these things. Otherwise, they're not going to take you seriously. So I'm going to give you two scenarios. This is going to be Mike. He has an electric company. He's an LLC. He's a single member person, or it's called the SMLLC, a single member LLC. So he's not a corporation. He doesn't need any special documents or anything like that extra other than his financials to do his taxes. So he makes revenue of about $1.2 million. He thinks he's doing great until things fall apart. And this is why. He has no idea what he owes to his equipment loans or his credit card statements. He doesn't know what he owns in his payables to his suppliers. It's all a guess. He just waits for the bills to come in and then kind of runs the numbers through his head. The problem with that is that if one of them is missed, he can make a really bad decision, get into either more debt, or actually miss the payment altogether. Without the financial statements, the profit and loss, and the balance sheet, the bank denies his credit line. He applied for a $75,000 line of credit. He needed it to be able to basically have a float in the bank, maybe to have the money to buy the materials for larger jobs, but he has no financial statements. There's no trust from the banks. They're not going to lend him anything based on a year-old, tax return. They want to see what the current financials are. They want to see what the trends are. They want to see if he's growing. Without those financial statements, though, that there's no deal. The banks will not take him seriously on that. It's just not going to happen. Also, at the end of the year, he looks at his profit and loss, and he thought he was profitable. He had $180,000 in net income, but his loans grew by $210,000. So how could he have $180,000 in profit, but his loans grew? He actually lost ground, meaning that his financials actually look worse. And I could probably say that's either due to buying equipment, or it's due to him taking distributions out of his company that exceeded his profit for the month. The profit meaning not only the expenses that he had on the month, but also his debts. So he was taking out money that was actually not due to him because there was already expenses that were tied to that cash in the bank. The last one is he couldn't buy that new van. He had an opportunity to get a large project, but he didn't have the service van or the staff that can to handle that. So he had to pass on that project because he didn't have the equipment. He could rent a van, he can get employees, but that would actually dig into his profits even more than if it were to buy his own van and be able to build his own business. So the result, he was stressed, he was reactive, and he was flying blind. Every financial decision that he made was just a gamble. He didn't really have anything, and he didn't have a business partner in the financial field that was going to help him make those decisions for him. So he lost out on some projects, and it also stalled his growth possibilities. So now we're going to talk about if he did have his financial statements in order, including his balance sheet. This is the same guy 1 year later, same revenue, nothing's changed really as far as his jobs, but he has a totally different outcome now. He's working with us. He knows exactly where he stands. He knows that he has $340,000 in assets. He has $185,000 in liabilities, and he has $155,000 in equity. And these are updated monthly. Remember, assets equal liabilities plus owner's equity. So $340,000 in assets is very good for a $1.2 million business that has that revenue. He got approved for that $75,000 credit line. So now he has some working capital. So if he is taking a large job and that he needs a little bit more upfront from the normal deposit to be able to pay his employees or anything like that, he now walked into the bank with clean financial statements. He was approved in 2 weeks' time, and he got that $75,000 credit line because he had enough balance sheet items. Assets and liabilities were low, or the assets were high, the liabilities were low, and he had equity that he was able to justify getting that $75,000 line of credit. So he also caught a debt problem early. He noticed that his liabilities were going up a little bit faster than he was, paying him down. So we were able to cut the spending on those debit cards or the credit cards, and pay down those liabilities quicker so that they wouldn't keep creeping up and cutting into his balance sheet, the look of his balance sheet. He was also then able to buy that van confidently. He was able to get a better interest rate, and the balance sheet showed that he can handle the payment. So he hired that tech, and his revenue grew. He was able to put that van in place for consistent jobs and show that he was growing. And it's also going to look good in the future when he starts paying down that debt. He's got a $75,000 credit line that he's paying, every month on time. And now he feels confident. He feels in control. He's growing his business because he could see the full financial picture of his business and make better business decisions. So just a real quick recap. The balance sheet shows what you own, what you owe, and what's left over. Assets equals liabilities plus owner's equity. Own, owe, leftover. Your profit and loss alone doesn't tell the whole story. You need both. They kind of work hand in hand. So the profit and loss does show the income and expenses. The net profit of that goes over to the owner's equity, and the hopefully deposits go into the bank. So it all flows through to a balance sheet. You can also say that could be kind of like how they describe a double-sided accounting system. So that is something that's on the accounting side. You don't have to worry about that, but it does flow in, and it all needs to work together. Without a balance sheet, he's flying blind. He denied credit, bad decisions are being made. With it, he has confidence, financial growth, and control. He's working with someone who's able to provide these documents to him, and also sit down with him and give him advice on those items. Every trade contractor, even a solo practitioner or a solo operator, should really have a balance sheet. It's really hard to grow without one, and trying to go retroactive actually can cost you quite a bit of money in catch-up work. The banks are going to require it. Sometimes the tax returns are going to require it. So no matter how small you are, you really should start with one. So how can we help you? We are a full accounting, tax, and CFO service. We specialize in electricians, plumbers, HVACs, roofers, and other specialty trade contractors. We prepare the monthly balance sheets, the financials, the profit and losses, the trial balances, the ledger details, etc. We do the bookkeeping, the accounting. We code, categorize, and reconcile your transactions so that your numbers are accurate and audit ready. They will also be good for your bankers or any other financial needs. We offer virtual CFO services, so that's a little bit different than the accounting and tax. We are someone that's in your corner year-round. We review your financials with you. We spot the problems and we help you grow. We look at things like your insurance, your general liability, your workers' comp, make sure classifications are done. We make sure your payroll and workers' classifications are done according to the IRS so that there is no problems in the future. Misclassified 1099 could cost thousands to $10,000s of dollars in misclassified employee penalties. So we help you with those things too. We're also enrolled agents. We're licensed by the Internal Revenue Service to represent you if you're ever under audit or have tax issues. We also assist with your workers' compensation audits as well as your general liability audits too. So if you're ready to get your financials in order, we're more than happy to help. There's no obligation. You could visit atprosinc.com. You could schedule a free 30-minute consultation. We handle the finances. You handle the work. We also, in our details, we offer a free PDF handout. There's no obligation. You could just click on the detail of the video and it will have a link directly to the balance sheet PDF that you can read. If you have any questions, you're more than welcome to reach out to me. You can leave a comment below. Please share this with anybody that you know that is in the industry that may find this useful. And then also, if you found this useful, please support the channel in 3 easy steps. You could like this video, you could subscribe and hit the red button. You could turn on your notifications and that'll let you know when we upload a new video. And like I said, again, please share if you know anybody else who is in the business and may find this useful. I will see you in the next video. We're hoping to upload probably about 3 to 5 videos a week. So please keep that notification on and hope to see you in the next one. Thank you so much.